Hey guys, so we're going to go over chapter 2 in our advanced accounting book. This is the Red Book, and this is kind of like a review. The only difference is that we're doing the sales and sales returns and the cash receipts journal for departments. So we have our departments like reels and furniture, and we're doing the same sales journal, same cash receipts journal. We're just in that discount or in that sales column, we're adding those departments. So it's very similar to what you've already done. The Like I said, the only difference is we're just breaking it by what we are selling. So here is our learning objectives: displaying the purpose and process of recording those transactions, journalizing the department sales, posting, and then those sales returns and allowance. So we talked about us being able to return stuff in chapter 1, and then our customers have to be able to return stuff to us if it doesn't fit or if it's broken or whatever. So when you're talking about departmental sales, we're looking at information and we are breaking it up because we want to know how much, one, we're selling of each item, of each of the different items. That's one. Two, we also keep track of our departments by our employees. So we keep track of how much money our employees are making in each department because we need to know if our cost for each department and how much we're making in each department to decide that, hey, maybe we need to go in a different direction and sell something else or add a new product line to boost up our sales because maybe our costs are too high compared to our revenue. So those are all things that we have to start thinking about when it comes time for that, merchandising corporation where you're looking at all of those things and trying to cut costs. Because remember, if we're not making money, we can't employ people, and people are the most expendable when it comes to having to cut costs. That's the first thing that goes is people. So we want to make sure that we are making the right decisions when it comes to what we're selling. So let me boot me off here so we can see the whole screen. So they talk about that realization of revenue. So it just states that revenue is recorded at the time of they're sold. So just like when we sell items, when we talked about this realization of revenue in accounting 1, when we perform that service, that's when we would record this. That's when we record the sale. Not when we got paid for it, but when we actually sold, when we provided the service. So it says, regardless of when the business actually receives cash, it records that sale amount. And that's, like I said, what we just talked about. Uh-oh, there we go. So here's our sales journal. Looks very, very similar. The only difference is that the sales is broken up into, of course, our example, grills and furniture. So we're still doing the accounts receivable. We're still doing the amount of the sale, sales tax. Those two added together equals our accounts receivable and how much they owe. So when you're posting, we always post individuals first. Individuals are posted weekly. Our totals are posted monthly. So this guy is posted weekly. We still are using sales journal page 7, so S7. We're still doing those same 5 steps of posting that we have done from the very, very beginning. And I'm sure all of you now, by this time, you should be pros and you could probably post blindfolded. So you're still doing your same 5 steps: the date, the journal, and the page number. What account, what amount and what if it's debit or credit. This has a debit balance. So debit and debit are plus. When they're the same, we add them together. When they're the opposite, we subtract. Once we update our account balance, then we're going to put in our individual number. So remember, individuals are posted first, they're posted weekly, and then we post our totals. So here's our totals. So we have the date, same thing, sales page 7, sales journal page 7. We have our total, which is a debit. We add them too because this is a debit. And then we post in our account number. And we do the same thing for the rest of the columns. We just follow what it tells us up here. If it's a credit, we post it as a credit. If it's a debit, we post it as a debit. Okay? So when we have our customers bring things back, we call that a credit memo because we're going to credit their account. When we took stuff back, we call that a debit memo because we would debit accounts payable. All right, we would debit accounts payable because then we would reduce the amount that we owe. And we're going to credit accounts receivable because we're going to reduce the amount that they owe our customers. So those are going to be reduced obviously in their contra accounts. So here is an example of the credit memo. We have the date. Here we are Wiley Outdoor. Taylor Apartments brought something back. It tells us what our number is for our credit memo. And it tells us what we brought back. So the amount of the sales return is the amount of the sale individually. We have to return their sales tax, guys. We have to return their sales tax. So we have a sales tax on that we're going to return. And then we have our accounts receivable slash, and that's important because we're going to have to post it to accounts, slash Taylor Apartments for the overall total of the thing. So when we post this transaction, we're going to post to 4 accounts. One here for sales returns and allowance. One here for sales tax payable. One here for accounts receivable. And then one here down here for Taylor Apartments. So there will be 4 postings for this one transaction. So this is where the posting becomes craziness. So when you're journalizing that and you're posting, basically we're just updating all those accounts that to show that that information, that transaction basically is going away. We're updating, we're taking it out of accounts receivable, we're taking it out of their customer account, we're taking it out of the sales tax payable account because then it kind of it basically just kind of wipes out that whole transaction. But we have to have the paper trail for it. If somebody brings something back, we have to have that paper trail. So here is the posting for that. Like I said, it's got to be posted in 4 different places. So you always start at the top, work your way down. Okay. So this is the second general journal page 8. The total amount in accounts receivable is a credit. And then notice our accounts receivable is going down. Okay, so notice it goes on the top. And then Taylor Apartments. So this just shows the posting of this guy here. So you can see that the numbers sit on top of each other. And like I said, we've done this before with just sales returns and allowance. This is nothing new. This is not anything new. The only difference is it just now says sales returns and allowance slash or dash grills. That's the only difference. So our cash, obviously we still give discounts and we're not doing anything different for our cash receipts journal except divvying up the sales and the sales discounts. So we now have a column for grills and furniture for sales, and we have a column for sales discounts for grills and furnitures. Now, you may have a transaction where they bought both grills and furniture. That's fine. You can have where they bought both grills and furniture and they paid for it. You can have a transaction where they got a discount for both grills and furniture. That's fine. Okay. And I'll show you how to do that when we do our work together. So this shows how to calculate that discount. So here's our sale amount times the sales tax. They're going to make you do that. So we're going to have a lot of calculations. So this is how much they owe. And then we take the total of how much they owe, multiply it by the 2%. That gives us the amount of the discount. And then we subtract those the invoice total minus the discount. And that's how much they're going to pay us. So we are going to do more math, but it's simple math, just regular adding, subtracting, multiply, and divide. And we're going to do it in order. So it's not going to, hopefully, it shouldn't, and we've done it before. So it shouldn't, hopefully, confuse you at all. So here we still have our point of sale. We still have our TSs. The only difference is they're spread out between girls and furniture. Here's our sales tax. And then here is our cash that we collected. All right, so the TSs haven't changed. We still have our check mark here. We still have our check mark here because we don't have individual accounts. They're all in the special columns. So it hasn't changed. The only difference is now we're just breaking it up. So the discount, this is doing a discount from the sale. So Taylor discount or Taylor Apartments, this is how much they owe, or this is how much they owed. We gave them a discount. They bought some grills. We gave them a discount for those grills. And this is how much they ended up paying us. So we calculated that 2% and gave it to them. Now, here is the biggest deal. So doing a discount or receiving a payment after they have returned something. So I think this is the only transaction really where people kind of get confused because they've returned part of their original transaction. So here's how we do this, guys. Here's how we do this. So here's the original invoice amount right here. Here's the original sale. Here's the sales tax we collected, and here's the original invoice. Well, they returned $295 worth of merchandise, which meant that we had to give back $17.70 in sales tax, and that total was $312. So overall, we refunded them $312. So they went from owing us $2,600 to only owing us $2,293. Now, when they pay us, they owe us this now, $2,293. That's the number that we start with. So we take the $2,293, multiply it by the 2%. That gives us our sales discount. Then we subtract those two numbers, and this is the amount that they owe. So before they owed us $2,605 before they returned some merchandise. After they returned it, they owed us $2,293, but then we gave them a discount, so they're paying us $2,247. This right here is the most complicated part of this chapter, and it's not even complicated if you just take it step by step by step. So you start with what they owed, subtract out what they returned, and then we figure the discount from what's left. So if you can keep it in order, you'll be fine. So anytime we post the letters CR, the journal page number, and the post reference, you guys are, like I said, you're pros at posting. Cash receipts, just another reminder, is CR. And then, of course, the page number. So all the individuals are posted first, and then all of our column totals are posted last at the end of the month. So that is it. So like I said, it's a quick review of what we did before, and we will get into it when we do our work together. Have a great day.